Okay, so now before I share with you my own trading strategy and look at some real world trading examples, I think it's important, right, to take a step back and actually do a recap to all the things that you've learned up to this point. So let's get started. So number one, right, the first thing about this technical analysis training is to share with you, right, market structure. And this is important because if you can define the market structure, then you know what to do. If the market is in an uptrend, you know you should be looking for buying opportunities, not selling, because you don't want to be trading against the trend. You want to be trading along the path of least resistance, to be trading in the direction of the trend. So that's what market structure does. It helps you define what's the trend so you can trade in the direction of it. So if the market is in a downtrend, then of course you look for selling opportunities. So next thing we covered is area of value, and this is important because just because the market is in an uptrend doesn't mean you want to blindly hit the buy button, because the market could be overbought, it could be getting ready to make a pullback or a complete reversal. So this is why we want to be trading from an area of value. This could be things like support and resistance or moving average. So for example, if the market is in an uptrend, we want to be looking to trade at support, around support area. Then this brings us to the third section, right? Entry trigger. So once the market is in an uptrend, it's at an area of value, then we look for a specific price pattern called an entry trigger to tell us when exactly to enter a trade. The entry trigger gives us some trigger, right, to tell us that, hey, at this point, the buyers, they are in control. They are starting to, turn up the heat, right? It's a good time, right, to now enter our trade and to time our entry. So once we have the entry trigger covered, we then look to cover our exits, right? What if the market moves against us? Where do we cut our loss? What if the market moves in our favor? Where do we take profits? And that could be, depending on whether you want to be a swing trader or a trend follower. So we covered all these different techniques. So in essence, right, what you're trying to do as a technical trader is, there are many ways to this, but this approach that I'm sharing with you is to trade with the trend. So again, number one, let's say we have an uptrend, series of higher highs and higher lows. Next thing we look for is for the market to come into an area of value. So in this case, let's say the market come into this previous resistance, which becomes support. The third thing we look for is a valid entry trigger. So let's say we have something like a hammer, right, to tell us that the buyers are in control, and we can look to enter on the next candle open. So once we have that, right, we want to cover our downside and to know where to exit the trade, if the market moves in our favor. So that's where we set our stop loss, which is beyond the price structure, somewhere here, and for targets could be just before this swing high over here. So at this point, you can see that we have defined the market condition that we are trading. We know when to enter, we know when to exit if we are wrong, and we know where to exit if we are right. So if you think about this entire training on technical analysis, right, is sharing with you this trading strategy called, it's like a formula, right? Call it MAEE, the May formula. And this trading strategy is not cast in stone. It is robust because you don't have to just trade uptrend, you can trade downtrend. You don't just have to use support resistance as your area of value. You can use things like moving average. You don't have to use candlestick patterns, right, for entry trigger. I shared with you the moving average break that you can use as well. You don't have to be a swing trader if you don't want to. You can also be a trend follower, to ride massive trends. So you can see that this trading strategy, it's robust in the sense that, you can tweak it right to your needs. And of course, there are more techniques and concepts that you can use as a trader. This that I share with you over here are the ones that I personally use, right? Of course, if you want to use different methods to define your entry trigger, like, chart patterns and whatnot, it's entirely up to you. So right now, what I'm going to do is to share with you some real world trading examples and see how this May formula, to see how this trading strategy, right, can help you profit in bull and bear markets. So let's get started. So first one here is the chart of Canadian against the Japanese yen. This is the daily time frame. So remember the May formula. So first thing we are looking for, number one, is M. What is the market structure? Uptrend, downtrend, or range? So I'm sure you can agree with me that this market is in an uptrend, right? A series of higher highs and higher lows, so uptrend. So once you know that the trend is up, do you want to be buying or selling? I'm sure you can agree that you want to be a buyer. So where do you want to trade from? Where do you want to buy? From an area of value, and in this case, the price is at this area of value, right, at this support. So let's call it the area of value is at support. Entry trigger. Do we have a valid entry trigger that tells us the buyers are temporarily in control and the market could hit higher? And in this case, we have a bullish engulfing pattern on this candle here. So I'll call this I'll call it a BE, bullish engulfing pattern. What about exits, right? Do you know where to exit if you are wrong? So if we are wrong, right, I want to set my stop loss 1 ATR below this low, which is somewhere about here. As for target, I can set it right just before this swing high, which is possibly around this $88 price point. So you can see at this point, We have covered the market condition that we are trading, the area of value we know where to enter from, we know when exactly to enter our trade and when exactly to exit, right, if the market moves in our favor or against us. So I'm going to go one step further and share with you, where exactly to set your stop loss and target. So just to do a quick recap, when we set stop loss, right, for me personally, it's always 1 ATR below the area of value. So this is the extreme low in this area of value. I find out what is this value and minus 1 ATR. ATR stands for average true range. So you can see over here, this ATR value currently is about 0.7, about 70 pips. And this low of this candle, right, from what I last checked, this is about 85.42. So I'm going to take this low over here, okay, 85.42, and I minus 70 pips. That gives me, okay, trusty calculator is here, 85.42 minus 0.7, that gives me 84.72. That is my stop loss level on this trade. So let's say the market, open on the next candle open, okay, over here. Let me just share with you where I will, set my entry, stops, and exits, okay. So let's call this entry, which is at the open of the next candle. I'll change this to, let's say, green, okay. So that's my entry point. Now, what about my stop loss? We just calculated it. Your stop loss will be at 84.72. Let's put it to red. Okay, let me just change this to 84.72. That is my stop loss. Okay, and let's say we want to go with a swing trading approach. We want to exit, right, and capture just one move in this market. So for this one here, we can exit just before this recent swing high. I'll put it, let's say, around the $88 price point. Let's set this to blue. Okay, and there you have it, right? So from this strategy, right, you know exactly where to enter, where is your stop loss, and where to take profit if the market moves in your favor. And you're trading in the direction of the trend from an area of value. I hope this makes sense. Now, let's move on to another example. Okay, now let's have a look at example 2, right, and see how this trading strategy, right, can be tweaked, right, using the techniques that I've just shared with you. So again, once again, applying the May formula, correct, market structure. This one here, again, it's in an uptrend. Area of value, you can see that this right now, the price has retest previous resistance, which could become support. Okay, so we have this over here. And then entry trigger. Okay, do we have a valid entry trigger to go long? So let me share with you, instead of, let's say, using bullish reversal candlestick patterns, right, we can also use the moving average break technique that I've shared with you. So let me just overlay with the 5-period moving average, as you can see over here, and notice that this candle has break and close above the 5-period moving average. This candle here has break and close above the 5-period moving average. So we have a valid entry trigger to go long. What about exits? Again, we can set our stop loss 1 ATR below this low and target just before this swing high over here. So let me again share with you how to set your stop loss and target, so you can see where exactly is your entry, stops, and target. So let's say we enter on the next candle open, it will be over here. Okay, this candle open. Let's change this to green. Let's say our stop loss is 1 ATR below this low. So find out what is the ATR value. At this point, it's about 53. Okay, let's say on this candle here, the ATR value is about 53.5. Find out what is this low. The low price over here, it's 1110. So quite simple. You just take this extreme low over here is 1110 minus 53.5. Oh, sorry, minus 53.5. Okay. 1110 minus 53.5, and that will give you 1056.5. 1056.5. So what you're going to do is to set your stop loss at 1056.5. And let me just share with you over here. Say stop loss is red, and the level that we will use is at 1056.5. There you have it, our stop loss. What about target? So again, let's say we are going to go with a swing trading approach. We want to capture one move, and for a swing trader, you usually want to exit your trade before opposing pressure comes in. So where might opposing pressure come in? Well, you can see that there is this swing high over here. So it would be prudent, conservative, right, to exit before this high over here. So I would say, a good level will be somewhere about here, 1293, 1295. Okay, let's change this to blue. Okay, so let's say 129, 1294. Okay, and there you have it, right? So in this example, you know where exactly to enter your trade. So let's do a quick recap. Market structure, it's up. We are trading from this area of value where previous resistance becomes support. We have a moving average break as our entry trigger, so we enter here on the next candle open. which is on this candle here. We enter here. Our stop loss is 1 ATR below this lows, which is here. And our target, right, is just before this most recent swing high, which is this blue line over here. And once again, right, I'm using the same strategy that I've shared with you, the May formula. The only difference is, right, we have changed our technique, right, for the entry trigger. We use a moving average break to enter our trade. So now let's move on and look at another example. Okay, so example 3, right? This time round, let's look at a downtrend, shall we? So we can see that you can make money in bull markets and even bear markets. So in this case, this time around, you can see this market dollar against the Chinese yuan. This one is on the 8-hour time frame. Let's apply the May formula and see how we can trade this market. So again, market structure, you can see this time around, it's in a downtrend. Okay, so market structure is down. Area of value. Okay, so this one is interesting stuff, because if you look at this area of value, you will realize that, hey, the market has retested previous support, which became resistance, and possibly at this area of resistance again. So area of value and resistance. And another thing is, if you overlay with the 50 period moving average, you would realize that this market also seems to be respecting the 50 period moving average, right? It tested a number of times, somewhere here, although it exceeded by quite a little bit, right? But I would still consider this, the moving average as an area, and it had a bounce, right? A number of times here, and now we're back here again. So you can see that the 50 period moving average is also acting as a confluence, right, at the area of value. So your area of value is kind of stacked right now. You have the resistance and 50 period moving average. So that makes the area even more powerful. Then what about entry trigger? So if you look at this entry trigger, we have something bearish price rejection. It's not a shooting star, it's not a bearish engulfing pattern. The exact term is called a dragonfly doji, but again, the name is not important. What's important is that you can see, right, that the sellers are in control, as you saw the price, right, being rejected higher. At one point in time, right, the buyers were in control and the price was trading near these highs. And then the sellers took control and push the price down lower and back to the opening price and closing right near the lows of the day. So this to me is a bearish price rejection. Okay, if you are not sure about it, you can wait a couple of days and see and watch the price action, and you will realize that what happened next, alright, was that this market is bullish and then followed by a bearish engulfing pattern over here. So if this one, made you undecisive, right, this one should have sealed the deal, because this tells you that the sellers are in control. It's a bearish engulfing pattern. The body of this candle has engulfed the body of the previous day candle, sellers closing near the lows of the day. Okay, so this, right, would serve as an entry trigger for you to go short on the next day open. So let's say you go short on the next day open, which is, let's say here. Okay, short here at the opening price. Let me just change this to green again to be consistent, right? Green for our entry. As for stop loss, right, I am going to be quick about this. I'm not going to go through the entire ATR calculation because you should be a pro by now. So I would say your stop loss, right, would possibly be 1 ATR above this high. Somewhere about here is your stop loss. Okay, let's call it S. And your target can be just before the swing low. So let's say this swing low you're referencing, this could be your target. Okay, so let's call it T. And the green over here, this level here is your entry. Let's call it E. Okay, so if your entry price, you know where to set your stop loss, and this is your target. So now let's move on to another example. Okay, so for this one here is the chart of Aussie against the Swiss franc. This is the 8-hour time frame. So let me, again, walk you through the trading strategy. Market structure, you can see that this market structure is in an uptrend. So market structure, uptrend. What about area of value? So once again, right, this is at area of support. And on top of it, if you overlay with the 50 period moving average, you can see that it tested once on the 50 MA, twice, and then a third time over here, and now we're back here again. So you can see that this again is a powerful area. It has the confluence of support and the 50 period moving average, which is respected by this market and on this time frame. What about entry trigger? We can see a bullish engulfing pattern over here. And if you don't want to go with a candlestick pattern as your entry trigger, you can use the moving average break, in this case the 5 period moving average. You can see the price also break and close above the 5 period moving average. So that's another valid entry trigger, depending which one you want to use, whether you go with a moving average break or a bullish reversal candlestick pattern. Both, right, will give you the signal to go long. So stop loss, again, simple stuff, right? We will set our stop loss 1 ATR below this low. So let's say we enter our next candle open, which is here. Stop loss 1 ATR below this low, probably somewhere here. As for target, before this area of resistance, possibly somewhere about here. Okay, so again, we have our entry, we have our stop loss, and we have our target. And in this case, right, this trade pretty much when in our favor and then collapse and hit our stop loss. So you can see this part here, it went in our favor and then collapse and hit our stop loss. And the message behind this is to share with you that, when you trade, all the stars can align, right? And that trade can still end up being a loser. So you have to be prepared for this. You have to practice sound risk management. Don't go all in and, risk 50% of your account or 100% of your account on one trade, because these things can and do happen. So be prepared for it. Now, moving on. Next example. Okay, so another example. This one here is the trade of copper. So, I want to say the May formula, but you probably get sick and tired of, Rayner, May, right? Irritating me. So again, the May formula. And again, let's have a look at this, right? Market structure, no brainer. This is in an uptrend. Okay, we both get it. Area of value. So in this case, this one here, you can see the price coming slightly into this swing low, the support, fair enough. And on top of it, you also have the 50 period moving average as what I'll show you right now. So you can see over here, the market has tested the 50 MA once, twice, 3 times, and now back here for 4th time as well as having this area of support. Then, entry trigger. Okay, so let's say we go with the candlestick pattern. We have a bullish hammer that is formed on this candle here. Okay, market close higher for the day. So we have our market structure, we have our area of value, we have our entry trigger. What about exits? Where is our stops and target? So let's say stop loss again, 1 ATR below this low. Let me just walk you through, okay? So what is going to happen is that you will enter on the next day open over here. Stop loss 1 ATR below the low, let's say somewhere here. So this is S and this is E, entry. Okay, I'm not going to work out with you where to set the exact stop loss level because you should be a pro by now. I did a number of examples, so go through the earlier training if you have forgot about it. And now, what about target? What if the market moves in our favor? Where do we exit our trade? So if you recall, right, I shared with you 2 techniques, swing trading and trend following. So earlier examples has been solely focused on swing trading. So now what if we want to ride a trend? So what you can do is you can use a moving average like the 50 period moving average, right, to trail your stop loss. So this means, right, only when the market breaks and closes below the 50 period moving average, then you exit your trade. So you can see for this example over here, the market went up higher, right, and hasn't closed below your 50 period moving average. Well, in fact it did, right? It did close below the 50 MA here at this point. Okay, but remember your initial stop loss is actually 1 ATR below this low, which is somewhere here. So your initial stop loss is not hit. So of course, right, for me, I would adhere to the original stop loss rather than exiting the trade prematurely. And once it moves in your favor, right, you can start trailing your stop loss using the 50 period moving average. And till now, the market is still moving in your favor. So of course, this is a cherry pick example, but it's to illustrate to you how you can actually trail your stop loss to ride massive trends. So in this case, let's say what happened now is that let's say the market suddenly, right, collapse and breaks and close below this 50 period moving average, which is this blue line over here. Then you exit your trade the next day. So this is how you trail your stop loss to ride trends in the market. Now, moving on to another example. Okay, so this one here is a stock trading example, and the reason why I'm sharing this with you is to let you know, right, that the concepts, the strategies and techniques that you've learned can be applied right across different markets, forex, stocks, commodities, futures, etc. So this stock here is FCX, the ticker. So again, same concept. Market structure is uptrend. Price has retraced into this area of value, right? Previous resistance, which became support. Previous resistance now becomes support, and back here once again. Let's say our entry trigger, we go with a moving average break. So let's pull out the 5 period moving average, and you can see that this candle over here has break and close above the 5 period moving average. So you enter on the next day open. So next day open, market here. So on this candle, you enter on the next day open over here. Stop loss 1 ATR below this low, which is somewhere about here. And let's say this time around you want to ride a trend and you decided to ride a longer term trend. So what can you do? You can trail your stop loss using a 100 period moving average. So let's see what happens. So let's say the market moved in your favor in this case, of course, because I cherry picked this chart, and you overlay with the 100 period moving average. So you can see over here, right, the price is still above the 100 period moving average. So only, right, when the price breaks, let's say breaks and close below this 100 period moving average, only then will you exit this trade. If not, you will hold this long position, right, till the trend, right, hits your trailing stop loss. So of course you can imagine, right, as a trend follower, in this case it's a long-term trend following a stop loss, right, you will be in this trade for a much longer period compared to someone who is trying to capture a short-term trend or someone who is trying to capture a swing. So again, something that you have to be prepared for. And finally, right, let me share with you a few examples, right, of trade that I do not want to take. Okay, now let's have a look at this chart and find out why this is a trade that, or rather this is a market that I'm not interested in trading right now. So again, using the same formula, market structure, it's up. Area of value, it's somewhere about here, okay, around the $42 price point. Is the price at this area of value? Not quite, so let's give it 1x, right? No. Entry trigger, do we have a valid entry trigger? At this point, we have kind of like a bearish looking candle, right? I am interested to buy. I don't want a bearish reversal candlestick pattern, so entry trigger is no as well. So if you don't have an area of value that you're trading from, if you don't have any valid entry trigger to enter a trade, you have no business trading. So this is a trade, is a no-go, and let's move on to something else. So usually it's going to be very quick, right? Once you realize that the price is not at an area of value, you can skip it altogether. You don't even need to bother whether there's a valid entry trigger or not, because if it's not at an area of value, why do you want to bother, taking such suboptimal trades? So quickly, you can move on into something else. So if you look at this chart, another example, pound against the Japanese yen, you can see this one here. Market structure is up, area of value is here. At this point, the price is kind of like in the middle of nowhere. It's not near any area of value, and I have no business, right? I have no interest wanting to trade this, because again, the price is not at an area of value. Why do I want to force a trade? Yes, it's in an uptrend, but from the looks of things, right, it's currently, seems to be wanting to make a pullback, right, and to reverse lower. So if I were to buy right now, I'm putting myself in such, unfavorable, situation. Does it make sense? Hey, what's up, my friend? So at this point, right, you have learned a lot about technical analysis. We talk about things like market structure, support resistance, entry trigger, stops, target, swing trading, trend following, etc. And to be honest, right, all this will give you a strong foundation, but we are just scratching the surface. There's a lot more that you can dive deeper, right, if you want to be proficient to master technical analysis. And if that's what you want, right, then I recommend, right, you get a copy of this book over here. It's called Price Action Trading Secrets. I'll put the link somewhere below this video, or you can go directly to this link over here, priceactiontradingsecrets.com. This is a 140-page physical color trading book where I'll share with you, right, price action trading strategies and techniques, right, that you can use to trade the financial market. So if you've enjoyed this training so far, this book here will take you towards the next level. We talk about things like support and resistance again, but at a much deeper level, how to tell when support resistance will break, how to draw support resistance, how to read candlestick patterns like a pro, different type of candlestick patterns that are worth learning. I'll share with you reversal trading strategies, breakout trading strategies, how to manage your risk so you never blow up another trading account, and much more. So you can see that there's a lot packed into this 140-page physical trading book. And also, right, if you get a copy of this book today, I'm going to throw in a few bonuses, right, for you. Bonus number one is a digital copy of Price Action Trading Secrets. So this book is a physical book. It will take some time to reach you, about 3 to 4 weeks. But if you want to get your hands on it immediately, the first bonus I will give you is a PDF copy of Price Action Trading Secrets. So the moment you check out, you will get the instant PDF version that you can start reading immediately without waiting for a few weeks for your book to arrive. Bonus number 2 is this position sizing calculator, so you never blow up another trading account. I'll share with you how to use this calculator so you know how many shares of stock to buy, how many units of currencies to trade, so you won't, blow up your account just because of one trade going wrong. And finally, I'll share with you this webinar. It's called Part-Time Trading Secrets, how you can actually be a consistently profitable trader without quitting your full-time job. All this and more, all these bonuses will be sent to you instantly, right, when you get a copy of Price Action Trading Secrets. And here's the thing, right, I know that there's a lot of trading books out there, and so here's my 100% risk-free guarantee to you. So when you purchase Price Action Trading Secrets today, and within 60 days, right, if you find it that it's not to your liking, you don't get any value out of it, just let us know. Just email support@tradingwithrayner.com and we'll gladly refund you in full. No questions asked, and you can still keep the book and the bonuses. How's that for being fair? So if that interests you, just go down to the website priceactiontradingsecrets.com over here. If you just click any of this blue button here, like this blue button here, or this any of the blue button here or here, you will be brought up to the bottom of the page. Just fill in your details and we will ship out the book immediately, right, to you as soon as possible. So with that said, I wish you good luck, good trading. I hope you've enjoyed this training. I will talk to you soon.